Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Second day of the week, Tuesday morning. We are coming to you, as always, from the CNBC-TV18 Motilal Oswal studios here in Mumbai. I'm Prashant. With me, my colleagues Sonia and Nigel. Morning, guys.
Hi, good morning, Prashant. Good morning, Nigel. After the last many days, looks like today there could be a hint of green on the screen. At least that's what the SGX and the Asian markets are suggesting. But you never know, right? Because it has been a sell-on rally kind of market.
Yeah, I mean, I think yesterday for the first time, banks did well, right? And I think that gives hope. It's a large sector, 30-35% of the weight in the index. And if banks pull in one direction, how far can the others kind of go in the other direction? I think that's the broader hope. But let's quickly, sort of start with where we left off overnight in terms of global price action, right? US markets, that's the number one thing. So there was a recovery. I mean, nothing very excitable or, huge in that sense, but the Nasdaq ended 0.6% higher. Volumes were a little lackluster, both on bond market flows and equity market volumes as well. But it was a positive close. The S&P 500 has held an important support. The 50-day moving average has been held. That comes in at about 39.80. By the way, the S&P bounced off the 200-day moving average late last week, and now the 50-day moving average has been held. So, people will look at this with some sense of hope that with these long-term moving averages being held, perhaps there is hope here. All right, now dollar index, which has been the big problem area for emerging markets, it had crossed the 105 level. That has also cooled off a bit. That's at 104.64. So 0.5%. That's a large move on the downside. The 10-year is flat. The US 10-year ended about 3.92. The previous close was about 3.94. So not very much at all, but they've not moved higher, and the dollar is markedly weaker this morning. The Nifty yesterday, coming to the market here, retested the budget day low, broke it, made a new low, and then saw actually a good recovery. I mean, we ended about 70-80 points lower at 17,392, but 17,353, which was the first of Feb low, was broken, and a new low was made at 17,299. And that becomes, in a way, the level to watch out for. In the near term, I mean, you basically want, and by the way, the close was also around the 200 moving average. That is also sort of coinciding around where the market closed. That's at about 17,376 or so. What you need to see, it's been 8 days, mind you, of, sort of negative closes, 8 straight sessions, right? So what you need is a move above yesterday's high and a positive daily close. I think that, and a strong positive daily close, and I think that will reignite hopes that perhaps there is a bit of a trend reversal in the near term, which may happen, right? So we'll watch out for a close above yesterday's high and a meaningfully strong close on the Nifty on a daily basis will reaffirm that. On the way down, yesterday's low, which is below the budget day low of 17,299, falls, and I think that should hold. That hopefully will hold in case more downsides kind of open up. On the way up, the 20-day moving average, I mean, we can look at retracements, etc. as well, but just putting out the moving averages, the 20-day stands at 17,757. It's some distance away, but that's the big first kind of, again, solid level to watch out for. Bank Nifty, as I said, saw a strong outperformance. The index ended 1% higher. For the banks, on the way up, the 20-day moving average stands at 49.93. We closed at 43.07. And with the kind of moves that banks are having, I mean, it's possible we kind of see a test of it if there is positivity in the session today. And yesterday's low of 39.747 becomes important to hold. I mean, banks in the last 2 or 3 days are looking a little stronger as compared to the Nifty, which was not the case in the prior 5 or 6 trading sessions. I think watch for the open, watch for the first hour of trading. It's not a very exuberant, strong handoff from Wall Street. It is positive, so that is good. But I think, in some ways, we're still left to our own devices. We got a very large sell number from FIIs yesterday. So while the handoff is positive, don't go by it blindly, jump in right at the open, watch how the price action pans out. And as I've been saying, let the market tell you that it wants to base out and perhaps wants to tick higher, move higher a little bit. Guys, hi.
Absolutely. And even the green on the screen, right? I mean, it's not a very convincing green. I mean, it's at best, it's a flat move. I guess, as Jim Cramer put it, he said the Fed can't calm a market where nothing is predictable. So I think this, the hawkish Fed speak is one thing, but these macro factors, I guess, are unprecedented in a way, right? So no one knows which way it's going to go. And that's what you're seeing in the market as well. So even if there is a pullback, Does it stay convincingly in the green? It doesn't look like that. I mean, the bears have definitely tightened their grip. You know, as Prashant was also pointing out, it's the longest losing streak that we've seen in the last 4 years, what we saw yesterday. The Nifty midday also broke that budget day low of 17,353. So that is another level to watch. Of course, we closed above that. But, you know, now that the budget day low is broken, does it sort of once again resume a downside? Time will tell. Large selling from FIs yet again. Yesterday, FIs sold over 2,000 crores. In the month so far, FIs have sold 6,000 crores, and in just 4 trading sessions, almost 5,500 crores. So this is another worrisome part for the market. Even if there is a pullback post the recovery in the US markets, does it sustain? That's a big question, because it's been a sell-on rally market for a while. A couple of data points that I'm watching out for. Globally, there are a lot of numbers that will come out. So there's you know, results from Target, Costco, Lowe's, Macy's, etc. And these are all big consumer names. So, you know, what happens with the consumption piece? These earnings will determine that, and then the trajectory of the market. In our own markets tomorrow, you have the auto sales that come out for the month of February as well. I'll watch that closely. The only segment which will do well this time is commercial vehicles, and that's also because there will be pre-buying. There are some real driving emission norms that come through from April. Prices will go up by 2 to 3%, so there could be some pre-buying this time around. So only commercial vehicles, Ashok Leyland, Tata Motors could do well. The rest of the pocket could be under pressure, especially the rural piece, because there is a risk to the monsoons from the El Nino, and that could impact, you know, the entry segment cars, two-wheelers, tractor demand, etc. You've seen this pocket under pressure. So let's see. The bears have been sort of tightening their grip on the market, but the bulls can give them a fight as well today.
Well, that's right, you know, Sonia, and it appears the bulls are up for a fight. You know, yesterday we defended the 17,300 odd mark, and just going by the global cues, particularly the non-equity close, the dollar index has cooled down, Brent crude has cooled down a little bit, the yields as well came off a little bit. It appears that if you get an intraday dip, today could be the day when you see a bit of a relief rally. Yesterday, there were some signs of short covering on the Nifty Bank itself. And today, the IT index that yesterday was under the weather, that could lend some support in today's trading session, because the Nasdaq was a relative outperformer. And the last 10 days to around 15 days, we have seen there is a correlation between these two indices. The PCR as well has come to the lower end of the range at around 0.72 odd. So if there has to be a bit of a bounce, maybe today is the day. The Nifty Bank, well, yesterday there was clearly a short covering bounce because it ended higher, the open interest was lower, and it took support from the 10% correction from the recent peak. You know, so that 39,750 odd, that's a 10% correction from the Nifty Bank's, you know, peak. Now, in the FIs in the FNO market, well, they added short positions. They added close to 9,000 short positions. The short position goes back to around 83% odd. But what was encouraging is, after a while and after many, many days, they wrote more puts than calls. Close to 90,000 put contracts were written. That's in the ratio of around 3:1. And that's encouraging, telling you that in the near term, maybe that 17,300 odd level could hold out. On the Nifty Bank, though, there was short covering. Though on the Nifty, there appears the short positioning continues because the open interest was higher. And in fact, the Nifty did end lower. But getting into expiry in the next couple of days, the weekly expiry, that appears there's a short straddle that plays out. What is that? The 17,400 call and put. You write both of them. You know, pocket close to around 160 rupees odd, and then you're playing for a range. On the downside, 150 minus 17,400. On the upside, 17,400 plus 150. And that gives you that range, 17,250 to around 17,550. But what is encouraging for me is the Nifty Bank as well. There was some signs of writing out there. 40,000 put, well, it added close to around 10% in terms of open interest. The premium at around 130 rupees odd. So the Nifty Bank support level is very important. Yesterday's low, February 1st low, and the 200 DMA. So this 39,250 to around 39,750, extremely crucial zone. The SGX Nifty is suggesting a flattish start. And the final mover today will be the Nifty Financial Services Index, because that plays out the weekly expiry today. So HDFC and HDFC Bank, they came to life in the final hour of trade yesterday, and they're going to be most important today because of the Nifty Financial Services Index that does play out. Just take a look at that chart.
All right, interesting stuff, Nigel. Thanks for that. Well, before we start, let me quickly tell you what is lined up in the first half hour of the show today. We will get you updates on the markets across the globe. Gary Schlossberg, the Wells Fargo Investment Institute, will join us to discuss the global setup. Our research team brings you CNBC-TV18's list of top 10 stocks for the day. At around 8:30 this morning, we do a fundamental stock check with Deepan Mehta of Elixir Equities.
Okay, lots to talk about. There's a lot happening in the commodity space as well. Coal prices are now at a one-year low. Rubber prices are at a two-month low. So commodities are cooling off, which of course will be positive for equity for a lot of companies. We'll talk about that in greater detail in a bit. But on the equities front, first up, we have a view coming in from Sunil Kaul of Goldman Sachs, who says that they stay overweight, or rather market weight on India, given high valuations, and they expect backloaded returns in the second half, driven by earnings accruals. He says, as Goldman Sachs had noted in their 2023 outlook, the slowdown in discretionary consumption supports their cautious stance on the sector and relative preference for staples over discretionaries. He also likes the themes of capex recovery and the Make in India theme.
Sanjeev Prasad of Kotak Institutional Equities maintains the view of further time correction for Indian markets, although he does not rule out price correction too if domestic inflation was to surprise on the upside. He says it may be best to take a slightly longer-term view of the market and portfolios given the large uncertainty around certain macro variables like inflation, interest rates, and rich valuation of the market and most stocks. He says his positive medium-term view on, he stays with his medium-term positive view on financials on the market.
Okay, good to get you some money market views as well and all that's happening there. Bhaskar Panda of HDFC Bank says the dollar index hovered around 104 pivot even as the GBP gained, the pound gained due to the new Britain-EU trade deal. He says US rates are expected to be hiked as inflation remains a worry. And oil is trading sideways. He also says the dollar-INR pair traded just below the 83 mark throughout yesterday, but the pressure remains today. He adds Asia ex-Japan is showing stability, hence he expects a similar trend in the US-INR, and he expects a range of 82.60 to 82.80 for the day.
Well, on bonds, Bhaskar Panda weighs in, says Indian bond market benchmark yields rose yesterday on the back of expectations of higher global rates and heavy state borrowing calendar this week. He says the 10-year benchmark bond yield is approaching 7.5% mark, but it may not be breached, and he expects it to trade in a range of between 7.4 to 7.5% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that